Hey folks, so in this video I just wanted to talk about Tyson real quick. So they actually had their earnings, it was like a few weeks ago, but basically it didn't look too good. So if you go to their investor relations page, they're going to have that earnings release and then they're going to have some supplemental information. So I'm going to go over both of these. So going over to the earnings release, I have this PDF tab that I downloaded. So let's just go ahead and look at this real quick. So here's the face of the earnings report. And if we just scroll down a little bit, we're going to see this sales, and it's broken down into segments. So this is very important, and this is kind of going to give us some insight on just what's going on in the economy as well. Because when I'm looking at the health of the economy, I look at companies like Tyson, for example. So if you think back on China, so countries like China, a long time ago they didn't eat too much meat, but since that country is getting more prosperous, you're seeing more people eat meat. So that same concept is going to apply in the United States. So if you see less people eating meat, that's going to tell you, hey, you know what, the country might be going through a hard time. And if you start seeing more people eating meat, hey, you know what, that might be a good thing. Like the country is a little bit more prosperous. People have more money in their pockets, things of that nature. So looking at the segment results here in the sales, there's something very, very clear. So you see beef is pretty much flat. So we're looking at 2023 to 2022 and this third quarter. So beef is pretty much flat, but pork is down quite a bit. So these numbers are actually in billions. So they did about 1.324 billion in pork sales, but in 2022 that was 1.619 billion. And chicken, it's down a little bit, but not as noticeable as pork. So 4.212 billion right here versus 4.366 billion. So that's definitely down. And we can see average price changes here as well. So they're actually able to raise the price of beef a little bit, but then they significantly cut their prices of pork and chicken, especially pork right there. So that's likely the reason why we're seeing these low pork sales because of that drastic change in that price. So overall, we can see the total sales right here is 13.14 billion versus 13.495 billion. So definitely a little bit underwhelming compared to last year. So let's just scroll down a little bit and let's look at operating income. So this is a little bit more surprising. You would think a company like Tyson would actually be making money, but that is not the case. They're losing money here. So take a look at this. We're looking at beef, okay? So if we're just looking at the profit right here, it's about $66 million dollars right here versus in 2022, this was $533 million dollars for the same quarter. Now, with pork, they're actually losing money. So this is negative $74 million dollars versus 25 million dollars in 2022. So also another big one right here, chicken. They lost $314 million dollars on chicken, and that's versus 277 million in 2022. That's a positive number. This is a negative number. So a big time loss in chicken. And pretty much their most profitable segment right here, it's looking like prepared foods, where they made $206 million dollars versus $186 million dollars. So we actually see an increase right here. So that's a good thing right there. But everything else is looking pretty weak. So overall, they lost $350 million dollars, whereas last year they made over $1 billion dollars. So this is definitely, definitely, definitely not a good year for Tyson. And it's not just this quarter. Last quarter was pretty crap as well. And they're actually expecting, pretty much all of 2023 to be pretty shoddy. So that's pretty much what's going on right now. Like you would think that a company like Tyson would actually be making money, but no, they're losing money here. So if we're actually going and we're looking at this earnings per share figure, right here it says GAAP earnings per share of negative $1.18, down 157% from prior year. So yeah, the earnings per share number is negative. That just means that net income is negative. So overall, company's not doing too great. Now let's just talk about some of the reasons. So if we clicked on that supplemental information that was on the investor homepage, we're going to see this right here. So I'm kind of focusing on these different segments here. So for beef, it says Q3 2023 sales were flat with lower volume that was offset by increased pricing. So they actually had a little bit of pricing power here where they were able to increase that price on beef. But if we're looking down here, oops, I went a bit too far. So if we're looking at pork on the other hand, it says Q3 2023 sales decreased primarily due to lower pricing. So what this ultimately means is, hey, you know what? There's less demand. They don't have as much pricing power. And I remember going to King Soopers, which is a Kroger brand, and this was about a week or so ago. And I was able to pretty much buy pork shoulder at a steal. I pretty much got this buy one get one free deal, and ultimately I was able to get pork shoulder at $1.31 a pound. Now, just so you guys know that I'm not just messing around, like I went on I looked this up online, and I found this right here, which basically was the same deal that I got. It says 58th and Ralston. I have no idea where that is, but essentially it says buy one get one free, and $20.18 each. Most of these, they tend to be around like 10 pounds or so. So it's pretty darn cheap. So you guys can clearly see, pork is not doing too well. Like, why would they be selling it this cheap? It's probably because demand isn't so hot on pork. So this is just one instance, and maybe this is just a rare instance, and this isn't really the case. But Tyson is telling us like, hey, you know what? We're lowering the prices here, and I would assume that is because of demand. Now, another interesting thing right here, this article right here, this is coming from WSWS.org. It says Tyson Foods closes 4 more plants, resulting in 3,000 job cuts. So if we scroll down into the article a little bit more, they also mentioned that 15% of its senior leadership and 10% of its corporate employees are going to be laid off. And they announced that in April. Now, that's definitely not good. You would want to see, you wouldn't really want to see employees getting laid off at a company like Tyson, because that would essentially just mean that, hey, you know what, maybe demand isn't that hot, and, they don't need to be producing as much. And right here, it says that these 4 facilities that they plan on closing account for approximately 10% of Tyson chicken slaughtering. So this is a pretty big deal. So they're definitely expecting some sort of slowdown in different meat consumption. So this is pretty much my overall just report on Tyson. And just to finish it off, let's just talk about the stock real quick. So 2 key things that I want to point out is if I go on Google, I'm just going to type in Tyson. Let's just type in book value per share. So as of right now, the current price is $54.63. And as of June 2023, the book value per share is $52.81. Now, what do I mean by book value per share? This essentially means we get all of our assets, we take all of our liabilities, and then whatever is left over, we divide that by our shares outstanding. That's going to give us our book value per share. So that is $52.81. It is very, very close to the current price. Now, I want you guys to clearly understand that Tyson is not a company that is always losing money. They're usually a profitable company, but times like now, where they're going through a hardship because of the economy, they might lose money. So I don't think that this is going to be a permanent thing, and maybe this is a good opportunity to pick up some shares real cheap. Or, it's highly possible that this could go on for several quarters. And maybe if you do buy now, you may be suffering in the short term. But I do also want to point out that Tyson does have a dividend, so let's just type that in. So Tyson dividend, it's 3.51%. And, obviously that's not super amazing because the treasury yields are giving you higher. But you do have to think, well, if in the future, if Tyson does get their shit together and they do make a positive profit, then, well, you're going to get share price appreciation on top of this dividend. So there's two things to think about there. So I wouldn't completely just discount Tyson and say, hey, you know what, Tyson is a money losing company. I do think in the future, you know, they will rebound. Just how far out in the future is really the big question. So I hope you guys enjoyed this video and have a great one.